rare. Cool little treasure. All right, coffee time. Go get my other glasses, BRB. Super different, right? All right, good morning. I guess we should start. Still cleaning my glasses, but welcome, welcome, welcome. Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance to try to reduce our risk, because risk or trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonald. I'm still cleaning my glasses. How are you doing today? You doing all right? So we got a busy day. In about 7 minutes, we have ADP. Then we have weekly jobless claims. And then at 10, there's JOLTS. Oil inventories come out today. And then we got to prepare for non-farm payrolls tomorrow. Yeah, crazy, huh? Crazy. Just so you know, I won't be on the Forex.Today YouTube channel, so why don't you swing by FX Street and catch me there to do non-farm payrolls live. Been doing that for 17 and a half years, that one webinar. Huh? Now, if FX Street paid me $1 million a year, I'd be rich. Anywho, how you doing? I think maybe the other glasses were better. I don't know. What do you think? Burberry, Tom Ford. Nah, well, these are cleaner. Anyways, cool. So let me know how I can help. I am your servant. Let me serve you today. Ask some questions, and I will do my best to address them. If you have a particular currency pair, a specific asset that you'd like me to cover, a specific topic, or today maybe we just lay back and let the news happen. You tell Uncle Wayne how you want to handle that. You want to do USD Swiss franc? I can do that, Daniel. But only for you. Everyone else has to cover their ears, cover their eyes. But yeah. Sure, I can do that. Yeah, cool. So technical analysis, fundamental analysis, it's all good. Trader psychology. Oh yeah, the whole crash and burn of being a Forex trader. Hey, this is a difficult gig. I've been there, highs and lows. The job, though, is to try to be consistent. You can't control the market, but you can't control your behavior, so you want to focus on that. Okay, in the description below our video, there are resources I'd like to point you towards. One of them is Investor Bootcamp. You're like, well, wait, what is their new sponsor? No. After 20 years of me running FX Bootcamp, I've decided to get serious and expand and get big. Knowledge. We want to share as much. I think FX is great. Forex I love. But you have so many more questions. The bond market, the stock market, the real estate market, personal finance, a whole bunch of other things. And I know, you know what? They're all interrelated. Macroeconomics, even microeconomics. You want to learn how to trade gold. You want to probably do options. There's so much to do. And so really FX Bootcamp has now been rebranded as Investor Bootcamp. So we can tackle these big, amazing questions that you have. But the underlying community hasn't changed. Like, for example, an investor mindset for life. The keys to long-term success through investing are patience, discipline, and the ability to do your own research. You will learn how to be the most prepared investor in the room, and thus, the most confident one as well. So you might want to check it out. I don't have the tour up yet. That's a placeholder. There's a few spelling mistakes, but we got that out there if you want to check it out. Okay. Now, one of the things I want to ask you is about how and when you want to expand. You want me to do a course on trading global stock indices, a course on investing in gold, a course on personal finance, a course in real estate, a course on hedge funds? How about venture capital? We had a request the other day for family offices. So maybe a point of view of being an investor, like an allocator from a family office, or maybe an emerging Forex trader or an emerging hedge fund of some other sort that's trying to raise capital from a family office. I'm like, oh man, we can tackle that a couple of different ways. So let me know what you want to do with our community, and for sure, we can build that together. And everything else is laid out here. So very, very clean and easy. The second one I want to point to you is QuantBox. And QuantBox is a service that I own that automates your macroeconomic research. Okay? Now, the reason I want to show you this is for all those that are QuantBox subscribers already, there's amazing upgrades I'm going to tell you about next week. Updates and upgrades that you will receive at no additional charge. some really cool new tools, features, some improvements, all that kind of stuff. But some of them are just going to knock your socks off. So for those that want to automate their macroeconomic research, okay, QuantBox, you can check it out. There's today's video from this morning. Yeah, we already have this morning going on. And of course, even your $8 trial gives you the training course. And then I want to point you to tradersway.com. I believe to be an ethical, trustworthy foreign exchange broker. They want to earn your loyalty and respect, and I recommend them. You might want to check out Traders Way. Beautiful, clean. Open up a demo account, and your back office is clean and organized. You can download MT4, MT5, all that kind of stuff. Check them out, tradersway.com. Let us move over to, where should we start? I guess we should start with the global stock market. Okay. Oh my gourd. Oh my gourd. Oh my gourd. Holy smokes, huh? Incredible. Absolutely, totally incredible. So in the day trading group last night, this was one of the ones we were talking about. And if my memory serves me correctly, we were here. Oh my God. Oh. Gee whiz, huh? Yeah, the UK is just going to have to raise interest rates so super high. It's just absolutely amazing, huh? Huh? Just, isn't that just amazing? I think it's amazing. You know, the acceleration and stuff. So here we are on the first of the month, and that actually predicts a lower low than we have now. That actually predicts this low, and you can see I have this line here, highlighting that. Morning, Lucas. Boom, 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 boom. Okay, so that, to me, it's just the acceleration and the continuation and everything is just really, really, really powerful stuff. You know, the Australian stock market's just coming down hard. Look at that, on trend. Just amazing. Bottom of the channel, again, is the target. Okay, just a little bit lower than 7,000. Okay, but just amazing, right? And one of the things I'm amazed about, and we did talk about this in the day trading group yesterday, so you know. That many of these stock markets are suggesting down or like over here coming down hard. And holy smokes, eh? The U.S. stock markets have been going up. And look at this. Do you know what we were talking about in the day trading group yesterday? Down. Okay? That the other stock markets are down. And we're looking for evidence of, in the beginning, no longer up, and then eventually down. And we're looking at things like, does a double or triple top on the Japanese stock market help us predict a potential double top on the US NASDAQ? Yeah, maybe. Does a lower low, lower high help us predict a potential top in the DAX. Does that help us predict the Dow? Yeah, maybe. Okay. And the S&P 500 kind of looks like this. Okay. Does the FTSE that look like this, will that eventually drag the S&P 500 down too? Yeah, maybe. Yeah. So one of the things we try to do a lot in the day trading group is trying to predict the future every single day. That's it. Now the swing trading group meets today, so it's day traders and swing traders. Well, I have you here. Let me show you where to log in for that. Okay, so you're in Investor Bootcamp, scroll down, and right here. This is where you enter for the meeting today. Okay, and all the new recordings are going to go here. And you click on this to launch the room, and there it is. And by the way, this room is just like Zoom, except we have the technology built directly into the website. So it doesn't like launch Zoom. Isn't this nice? So we have our own webinar software built into FX Bootcamp. Nice. So it'll look like this. I'll show you yesterday's day trading. Okay, see how nice this is? There's the recording, and there's the webinar room for the next meeting. How pretty, huh? All right, happy day, everybody. It's Wednesday, the beginning. Okay. That lovely. So look. There's the FTSE, the UK 100 we were talking about yesterday. Look, we're right on the double bottom. I got the giant arrow. Look, we just talked about it. That was last night. And then we look at it today. This is why I'm like, ooh la la. Look. We went right through. Holy smokes. Like, I'm telling you. Cool, man. Okay. All right, cool. So, ADP higher than expected. Okay, cool. We'll talk about that in the swing trading group today, 4 p.m. We'll also talk about meeting minutes. There's a lot going on. Cool. Oh, Grandpa Chan's in the audience again today. Hey, good to see you, Daniel. How's the big TO treating you? Possibly the most expensive city in the world. I'll never forget taking a taxi cab from my hotel to a different hotel, going up to the rooftop deck, ordering a scotch and a cigar, and taking the taxi back to the hotel, and it was like 300 Canadian for the whole thing. I'm like, oh, what are you talking about? And the cab was only like an 8-minute ride from one side of a park to another side. We crossed a park, basically. Went from the tower, the CN Tower, to the fancy hotel and back. And I'm like, yeah. Shrog likes my shirt. This is actually one of my favorite shirts, Shrog, and I'll tell you why. This thing doesn't wrinkle. It's plastic. It sounds like garbage bags. It's totally plastic. It looks like it's like there's a weave and stuff. No, it's 3D printed. Look, it's plastic. I don't know if you can tell. There's no material. There's no cotton. There's no wool. It's weird. Can you hear it? It's totally plastic. Yeah. Yeah, it's the weirdest thing, man. It's the weirdest thing. It's weird. So again, it looks like it's woven, but there's no texture to it. It's made out of like recycled garbage bags or something. Maybe grocery store bags. It's the weirdest thing ever, Shirag. But thank you. I appreciate it. Does it breathe? No. No, it doesn't, Lucas. Oh, yeah, Emerald likes the watch. Yeah, it's a B&R, Bell and Ross. I can't read the an 03-94. So you can Google that. All right. Cool. All right. So looking at now the S&P 500, beauty, man, beauty, 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 beauty. Okay, this sets up something interesting. Okay. Now, normally you would do this. Am I correct? Maida says, so you're basically in a plastic bag today? Honestly, yes. It's it doesn't wrinkle. You know what? I should probably jump in the pool today wearing my shirt and see what happens. Like, do I come out dry? Right? Like somebody in a movie. Have you ever seen that? Like, you know, a beautiful woman walks out of the ocean and she's dry. You're like, dude, you just walked out of the ocean and your hair's dry. Yeah. Anyways. All right. So look at this. This is what you would normally think. Someone that only uses technical analysis would think like this. And it's not wrong. Yeah, Lewis, I got it. Yeah, I got it. Look, I guess a few people are posting. Is anybody surprised? I didn't talk about it. Like, I don't know. I don't know. To me, it's not surprising at all. I mean, this is why we're in the situation we're in. So that's why I'm like, we kind of already know all that, right? But I'll talk about it today in the swing trading group. I know I'm going to talk about it tomorrow at non-farm payrolls. But according to whom? Right? That's the other thing. Like, according to whom is it surprising? But does it change anything? Yeah, I guess not really. Depending on what your opinion was before. So, anyways, that seems. It's high, of course, but it doesn't seem wrong. I don't really discern the difference between like 397 versus 497, right? You're either about target, above target, or below target. I think we still have a red hot economy. So, yeah, that fits my model, right? So I'm like, I'm not that surprised. But I may have a different opinion than others. Okay, but I don't know what other people do, so it doesn't bother me, right? not my problem. But anyways, so cool, right on. So anyways, let's go back to this. This is what a technician would do all day, every day. And this is what I would have recommended or have recommended all day, every day in this context, right? And you can see the acceleration. Okay. All that kind of stuff. But what's the vertical line? And technically I'm off one candle, I think. No, I don't have much of a choice. I'll put it there. All right. It's closer. The end of that day is close, and this is 3 days off, right? So anyways, yeah, Canada Day, the most important day of the year. And then what do I expect to happen? Like, why do I care? Why do I care? What do I expect to happen? What is the raison d'être? Type in a question mark if you don't know. Okay. And while I wait, I think it's time to make an announcement. Daniel Chen and I want to put together a networking event in Singapore. How many people want to come? And Daniel's like, wait, what? What did he just say? Hey, yeah, Daniel and I, we've decided we're going to do a networking event in Singapore. How many people want to come? Yeah, we should do it. I mean, come on, we should do it. Yeah, Daniel, I've said, is the most interesting person alive. Yeah, so you got to meet Daniel. Yeah. So we got to get together, everybody. It'll be a special treat. Yeah, we should put something together. Yeah, you'll like Daniel. We've had so many great fun stories. I remember one time we were in Guangzhou and I get seahorse soup. And I get my bowl of soup full of seahorses. And I take a picture of it and I send it to my daughter, who at the time was, I don't know, 10 years old. And she cried. Because Daddy was eating seahorses. Anyways, we got 1,000 stories like that. Yeah. Okay. All right. So, yeah. Okay. Nobody knows. That's interesting. You guys don't know, huh? Okay. This is a turning point in the market. We don't know if whatever has been going up will go down. We don't know, but it's a moment in time to prepare for a potential turn. So when you see this, that's still what would probably happen, and that's what a technician would do. But that vertical line, I know, has some sort of value based on what typically happens this time of year after studying 20 years of price action. So look, I don't know what's going to happen here. I don't have a crystal ball, but I do have some research that suggests probabilities are changing. Right? Probabilities change. Think about playing Texas Hold'em. You got pocket jacks. You're like, oh, this is good, but it's not great, but it's good. So you bet fairly strong the first round, and another person bets fairly strong too. And you're like, oh, they might have something. But the fact that they would need, let's say, a couple of queens, a couple of kings, a couple of aces, you're okay. Odds of that are fairly low. Okay. And then the flop or the three cards drop on the table. A 2, a 4, a 6. And you're like, oh, this is really good for me. Right? So another round, because you're like, this guy might have a couple of 6s and a couple of 4s, but I have a couple of jacks. Not a problem. Okay, an 8 comes down next. Oh, the probability of you doing pretty good. Like, there are hands that'll beat you, but not many. And I don't know if I just was drawing a straight. I don't know. Let's make it whatever. A couple of 9s or something instead of whatever. Definitely not a straight, okay? And they're all mixed, so there's no flush. Okay, great. So you're feeling really confident. And then the last card comes up, a king. Well, hell's bells. The probabilities of you winning has dropped exponentially because one person just needs one king in their hand and they got you. Your two jacks are beat. So you're like, oh my God, right? Or let's say you got the three cards are on the table, right? And the fourth card is a queen. Now someone could have one queen and they can beat your two jacks. And then the next card is a king. So now two kings, right? So one queen in a hand, one king in a hand. All of a sudden you're just not even likely to win, and you have to throw away two jacks. Yeah, anyways, whatever. I'm trying to tell you the probabilities can change if you know the game. And so we're looking outside of technical analysis on this one and saying, well, if you study the candlestick price action for 20 years, you're like, I don't know what that means for this year. This year is different than the last. Past performance does not predict future results. But you're like, okay, so I'm just looking, you're like, okay. And what I'm thinking might be possible is that the 21 may have less ability to hold price up, and that maybe something like that forms in the near future. That's all I'm saying. And now, if that was happening, would you even recognize it? Or are you still just playing your two cards? Anyone that's played poker before has run into the situation where you stop looking at what everyone else is doing and you're just thinking, man, I got two jacks, I got two jacks, I got two jacks. And you're not even looking at the possibility that someone's got two kings. You're just so, right? Or have you ever had like three of a kind, two jacks, and there's a jack on the table, but you don't see the straight? You don't see the flush? You're like, dude, all the cards on the table are hearts. Your three jacks are just not good enough, and you're just so focused on you, right? So anyways, would you even recognize that this is reversing? Well, I don't know if it is reversing. Nobody knows if it is reversing, but wouldn't it be helpful to know on that vertical line that the potential is higher? Higher than here, higher than here, higher than here, higher than here, higher than here. You should be ready for it. So all of a sudden, maybe it's now. But we don't know. This might just be a buy the dip and let her rip. Yeah, we don't know. But the thing is, if you're waiting for it, when would you know? So if it did this instead of this, would you recognize the difference? So you'd have to be measuring this, and you'd be measuring this, and then you also need to measure this, and then you measure that, which means you're probably going back and resetting off the future 21. Yeah. Okay. So then you'd need price action. Okay, well, if it was doing that, then it would do this, and then it would do that, and then it would do this, and then it would do that. And then you take your profit, but now you're like 9 steps ahead. Okay? Okay? So this is where your spidey senses should be tingling. It hasn't reversed. It's not reversing, but it might reverse. When would you know? Okay? Like this top. Okay, this top. It's all been planned out, talked about, all that kind of stuff. When do you recognize it? When will it become a reversal in your eyes? When would you consider selling the rip? Remember, some people buy the dip forever, even after it's coming down. Higher claims, thank you. Yeah. Little tug of war going on. It's nice, huh? Maybe a trap and break. Maybe a reverse fib. Okay. Remember, what you're trying to do is be ready, willing, and able. Like you recognize it can double top before it's double topped. That's helpful, isn't it, guys? You can anticipate the double top before the double top, not because you're going to be the first one to trade it, but you know that the odds are changing and that you need to adjust with it, right? Versus just having no idea when things stop and start. Now, that's a double top, and the S&P 500 is a higher high, higher low, right? Just trying to, again, we spend so much time on these charts because we're using them as leading indicators. German stock market is now at the precipice of its lowest low. If it drops below that, it's very technically significant. Let me get rid of that. That's old. Let's go further back. Okay. It's very technically significant. Okay. September, October, November, December. Okay. By the way, yesterday I was talking to the day trading group and I thread together some fundamental ideas. And I said, if this stuff came together, that would make the stock market rally. Does anyone from that group remember the day I said I would exit an S&P 500 rally if it happened to occur under those fundamental pretexts, which we don't know? But if it did rally, I also discussed the day I would exit. Does anyone from that group remember the day? Now, this is the German stock market. I wasn't talking about the German stock market, but it works the same. No, Andrew, no. Exit. October 1st is not an exit date. No. Do I use that dollar index and yen index for analyzing? Yeah, absolutely. December 15th, close but no cigar. You have to remember, I use anchors. I use anchors to help remember these rules. They're not really rules, but thank you. Why December 12th and not December 15th? What's the anchor? How do we train ourselves to remember? Why December 12th? Why not the 13th? Why not the 15th? How can you remember? Because remember, the idea is that you remember this stuff months and months and months in advance. So then when you get close, you're like, oh, I should remember to keep my eyes open. Canada Day. And no, Denise and Maida are correct. No. Denise and Maida are correct. But how can we remember December 12th? What's an easier way than December 12th? Type in a question mark if you don't know. Figure out the pattern. It's just a pattern. It's just an anchor. Fed meeting, yeah, sometimes, but yeah, that's kind of why it works, Maida. But you guys are too smart. I keep telling you, you're too smart. What's the pattern? Year end, yes, but it's before year end. 12, 12. Twelfth day of the 12th month. Yeah. It's just, I just want you to remember. So when you get close to 12/12, you're like, oh, I should remember something. What am I supposed to remember? Look for the potential for profit taking. And if you see it, maybe you should take some profit. Okay? Now that's when you start to look for it. When do you absolutely, totally take profit on a stock market rally if it hadn't happened in this period? The answer is definitely take profit the first week of the new year. If it rallied up and it kept going up and kept going up and kept going up and kept going up, the 12th, the 13th, the 14th, and all of a sudden through Christmas, it's December 30th and it's still rallying. Okay? Then take your profit, definitely. Worst case scenario, last chance. Okay? Now, why is that also important? Well, if you're American and you cash out 12/12, so you see it's an exit day, and you see it. Okay, great. So you will pay taxes in April. So in this case, it's 2023, so you'll pay taxes 2024. Okay, so you wait and you take profit 3 days later, you pay taxes April 25. Snap! Da, 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 da. Yeah. Cool. Defer. Huh? All right. So anyways, what I was suggesting here is using a similar logic. October, November, look, right? Then a drop, December, January, February, March, April, May, okay, June, July, okay, Is that more likely now than before? Yeah, I think so. Okay, it matters. So I teach you price action. Every boot camper on the planet knows how to trade price action. Because in my opinion, if you can't trade price action, you can't trade. Okay? What used to be resistance is now support. Cool. Great. Rinse, rinse and repeat. What used to be resistance becomes support. Great. So now you'd mark the new one. Okay? There's the future trade. So I was showing you earlier, maybe not on this asset, but it doesn't matter to me. That's why we're investor boot camp now. Okay? It's another tradable asset that's influenced by macroeconomics. So you have the higher high. Oh, well, I could even go back one. Let's go back one for congruency. Okay? Great. Okay, great. Up, 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 down, down, buy. Oops. Buy. Up, 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 down, down, buy. Up, 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 down, down, buy. So now what? No higher high, no lower low, lower high, lower low, lower high, lower low. Would that matter technically? If you trade price action, yes. Those that don't understand the basic ebb and flow of capital, they'll keep buying because they think up for, I don't know why they think up. But anyways, they do what they want. They do what they want, but that would be wrong. What do you think about that lesson? Was that good? Was that helpful? Can I get a thumbs up for that? Can you tell YouTube this is quality content? Okay. It's not very many likes. Less than half the people have had the courtesy of clicking the like button. Yeah. Look, I just want YouTube's algo to recognize that this is a good community. That's all. Okay? That's all. I want this to help. Okay? This could be meaningful. This might be meaningful. Okay? This might be meaningful. Part of that analysis is not even on this chart. Going back to seasonality, and that's for you to do your own research. I offer that on QuantBox. So everybody with QuantBox can do the research, but you might look at that through a different lens if you already thought this has a higher probability of turning south, even though it's been up for a year. Today is a new day. And then you're like, as Kanye West would say, "Oh God." Click, 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 click. Ain't nobody trade like my click, click, click. Oh, no, there is a fundamental correlation. They are a funding currency. So why would you fund them, Moses, right? That question. But you might, this year, there's a bit of a breakdown in the correlation because we have not just central bank divergence, but, the Bank of Japan actively intervening in their current, in their currency. So it's the yen, for example, is extraordinarily manipulated. Yeah. But to answer the question, do they move independently? They can, because they are independent. But is there a fundamental correlation? Absolutely. Okay? But correlations can and do change. And this year probably has less correlation than typical, but nonetheless, I would still say yes. All right, these markets are down, bro. Amazing, right? Let's quickly take a look at some of these indices. Okay, look at that dollar getting strong. It was very, very weak. Yeah, it was very weak. Just kind of silly weak. And then all of a sudden, boop, there it is. CAD getting hurt, all that kind of stuff. Aussie's way down. Dog with fleas, of course. Kiwi's dog with fleas. Okay. All that stuff we already know. Okay. I'll point out, here's gold. Let me drop into an hourly chart. This is something that, again, last night in the day trading group we talked about. I don't know. Can you, for those that are not in the day trading group, can you figure out my thought process? Do I have to add words, or do the squiggly lines make enough sense? Cool, right? Is July a good month for gold? No, July is a pretty, not good date. Good, no. What about August? Is August a good month, bad month, or flat month for gold? Actually, let's do a poll. I'm going to do a poll. Hang on. Okay. Is August dot, 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 dot. How about this? I have to change it. August is dot, 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 dot for gold. XAU. Good. Flat. bad. All right, there you go. Yeah, Meta, I answered the question actually on the chat. Yeah, how about on the chat? Yeah, Hayden. No worries. By the way, I met this wonderful wonderful guy over the 4th of July holiday. He was so nice, so genuine, so happy. He was nice to me. He was nice to my son, and he was Cuban. Wealthy too. Yeah. I was at a racetrack, and he was racing an 800 horsepower Mustang. My son has a Mustang. So we struck up a conversation. He was just great. And he's like, you want to come around a couple of laps? Hell yeah. But take my son. He's like, I was talking to your son. Oh. Anyway, so he took my son out onto the track. Yeah. So you do 2 laps around the track, and you have to change your tires. He has 20 tires. So he spent $10,000 just on tires that day. Yeah. And his Mustang was, like amazing. But he was just having fun. Living large, living the American dream. Yeah. Can't do that in Cuba for sure, huh? So anyways, he was just so nice though. Honestly, he was just so nice. He was just smiling. His wife's out there in the track with him and all that kind of or running the trailer and all that kind of stuff. Just super nice. He's smiling ear to ear. Jump in, jump in. My son's still trying to get all the harness. You're like, yeah, you're good. Don't worry about it. Like even like I swear, as they're coming around the track, right? They're waving out the window. There's your papa. There's your papa. One more lap. Yeah. So anyways, yeah, just an amazing guy. All right. Amazing guy. Just, right? Loving the 4th of July maximum. Anyways, okay. Well, Maida, though, you can almost see it in his eyes too. Like, he, like somehow there was an extra level of joy. Like he knew what he had accomplished with his life. Like he must have done time in Cuba. Yeah, yeah, yeah. Like he knows, right? He knows. Yeah. So anyways, all right. Let's answer the golden question. Wouldn't you like to know? Let me get my tool. There we go. So, let me expand. Let me expand. Wouldn't you like to know? Oh God. Not the best month, not the second best month, but the third best month. Ooh. So people are buying it too early, bro. Because they don't understand love or gold. They don't understand it. They don't understand gold. So there's two things going on. They don't understand why it's falling. And yet there are so many YouTube gurus that are just buying the dips. I'm like, you don't know what you're doing. You don't understand the why. Now, there might be some wonderful technical reasons, like maybe you should buy it here. No. Maybe you should buy it here. No. Maybe you should buy it here. No. No. Nope. Okay? And there's a time for everything, but it's not the right time now. Maybe that'll change in the next few weeks. Maybe by the end of July, we could kind of get ready for maybe a change in direction, at least for a few weeks, maybe a little bit of up for gold, right? Maybe. But that typically doesn't happen now. But what if things changed? What if it did an inverse head and shoulders and it took 3 weeks and then started doing this and doing things like rolling over the 2155? Okay? Well, then that's a whole new world. Like, dude, that's way different. So I couldn't imagine trading like most people where you're just kind of guessing all the time. Why would you want to do that? Of course, there's this argument, well, we have high inflation and it's going to be persistent. Actually, we're in a disinflationary period. Yeah, we have been for a while. Disinflationary period. Huh? Yeah. And technically, this is bearish. You're like, but wait, not on a 15-minute chart. Well, you do you. Right? Or if someone said bullish, right? I say that's technically bearish. So you do you. My WTI, I'm still quite neutral. I'm building something for oil that you guys are really going to like. I even have this thought, and I might actually do this. Yes, I want to integrate all the data into QuantBox. But I also thought I'd create a website and just give it away for free. I had this dream, and we've talked about it for a while. Wouldn't it be cool if you could get like EIA information, OPEC information, and let's say Baker Hughes? Information all in one page? Like production, inventories, rig count, okay? And not just inventories, but like calculating historical averages and ranges. So you can relatively say, how much production do we have? What's the historical norm in production? What's the change, increase or decrease in production levels? And then relative to the historic norms, how much inventory do we have? What's the history of the inventory? What's the historical averages, and where in the historical average range are we? Do we have about normal levels of oil in storage? Do we have below level? Do we have dangerously low levels? Do we have right? And then what about future production? Are we adding rigs or are we subtracting rigs so that we can think 3, 6, 9 months in advance. And you just have it everywhere. So I'm actually building that. I actually got most of that right now. Almost all of it, in fact. And I thought I'd put it in a quant box. Oh yeah, and prices. I didn't even mention prices. Like not just prices like here's prices this year and here's what prices look like last year. But what about the, so we're in July, what about the August, September, October, November, and December prices based on the futures contracts? Is there backwardation or contango? What about OPEC, EIA, World Bank, Fed, ECB, and the OECD projections for future global GDP as a substitute for aggregate demand of energy? Would you like to have all that in one place with various calculations and graphs and charts and images to help understand it all? And I thought, you know what, I'm going to do that. I'm going to put it in a quant box, but people are already paying for a quant box. I'm not going to charge extra for a quant box. And I thought, but a lot of people just might benefit. So I bought something called Epicenter Energy so that you can go to Epicenter Energy, right? The center of the energy market, and get all that information all in one spot. And I thought, you know, I'll either give it away for free or stick like a Google banner ad on it. But I haven't done Google advertising in 15 years. Do you have to pay for data that's described in a quant box? Yes. I have a choice, of course. I could just scrape it and steal it. I do not make that choice. As an entrepreneur and as a former venture capitalist, I'm very sensitive to intellectual property rights. So yes, do I pay money? Hard cash. Yeah. Okay. Yeah. Cool, right? And then you're like, well, would 10,000 a year be enough? No, it would not be. Yeah. So yeah, like real FU level money. Yeah. Plus developers, plus hosting, plus upgrades, plus, you know, but all that kind of stuff. So anyway, so I bought Epicenter Energy and so I'm thinking about doing that, throw a banner ad on it, and maybe it'll help somebody, and maybe I can pay for some of my server cost. Right? So anyways, keep pushing me to do it, guys. I need your support. Oh, I'm working my arse off. So that is happening in the background. I don't have the URL on me. Maybe I do. I have an incredibly rough. This won't let me in there, huh? I need a different browser. Where's my other browser? Maybe this one. Oh. Oh, I might actually have it. just so you know that I'm not BSing you, this is the rough draft. But this is live data. This is live data. This is not like images. So I'm working on seasonality. Okay, see, it doesn't quite fit in, so it's really rough. But we're looking at like, what are oil prices going to be December 2024, 18 months in advance. I got future oil prices. Production levels going out to 2024, the end of 2024, 13.1 million barrels per day. Monthly average oil price, monthly production levels. Oh, production levels are going up over 400,000. Okay. Hey, how much oil does Gabon produce? Iran versus Iraq versus Kuwait versus Libya. This is all live data. See? I mean, it's great. This is what OPEC is doing. Look at, I told you about GDP growth. Look, we're working on it. This is all next year's production growth. So we're at 2.7, going to 2.9. There's some future growth that might need some energy. Here's those historical averages I told you about. We're generating these. Isn't this nice? Month by month, week by week, quarter by quarter, 5-year range, high and low. So looking at this, let's go monthly. We're about right. We're doing okay. We don't have too much oil. We don't have too little oil. So we're okay. Okay? So look at production, imports. Okay? Changes, exports. So I was talking to a fund manager last week, and he said, well, you know, the United States doesn't export. I'm like, no, they totally do. And they're like, well, yeah, they kind of do, but it's not a big deal. And I'm like, but I can actually show you exactly how much. And I took a screenshot, and I said, right here, and I showed, these are the actual exports of petroleum products by the United States. And I'm like, boom. And he's like, oh, I had no idea. Well, I know everything. I mean, right? I mean, it's rough, but it's getting there. It's a start, right? See? Look, I'm telling you, that's a live database, guys. I'm going back. I'm going back to Cali. Look at this. Adding more data. Yeah, but see, now it didn't update or it didn't fit it on the chart. I don't know. So now that didn't work, but you saw it. It worked. So I don't know. Hey, it's rough draft. But, you know, this is what I'm doing for you. Yeah, dude, I know. There's a lot of cool things going on that I've already done. I'm going to tell you guys about all the updates in QuantBox next week. Many of them are for retail subscribers. Most of them are for the professional subscribers. But everybody's going to get something, and it's beautiful, and I'm going to knock your socks off. If that's my rough draft stuff I'm playing around with, wait till you see what I'm going to give you at QuantBox. So look for your emails, huh? Watch your emails. Okay? I mean, really good stuff. So I'll be working on some of that today, in fact. Yeah, cool. All right, so gold way down. We already knew that. Bitcoin, interesting, huh? Bitcoin. Yeah. Yeah, I don't know what it wants to do. But I know if you want to own crypto, it's the only game in town now. Okay, so S&P 500 down today. Remember, I've prepared all of this, I think about 2 weeks ago. Maybe 3 weeks ago. 2 or 3 weeks ago, I've already prepared for something like this. I'm okay. I'm all good. If you were concerned. Wayne, what about your retirement portfolio? I'm good, dude. I'm good. I'm okay. Okay? I'm all right. I've designed it so my worst case scenario is my money doubles every 8 years. That's it. And then when I'm too old to work, which is very, very old, I will live on money that my money is made for me. My money will pay me money like a salary. I will pay taxes like I'm on a salary. Who do I work for? I don't do anything. So where does the salary come from? My money pays me. And when I die, there will be too much money. So my kids will fight to the death over my money when I'm dead, and the Le Creuset. And my Shun knives, my Le Creuset pottery. When I bought that stuff, I told my wife, she's like, that's an incredible amount of money. I'm like, it's Le Creuset. My kids are going to fight over this when I'm dead. And sure enough, you wait. Yeah, I don't actually know, Meta. I don't know. I'm a weird dude because even just like the holidays we just had, really, I have a hard time with it. And it throws me off. Yeah. So I don't know. Yeah, what is very old? I don't know. I think, one of my, I wouldn't say heroes, but someone that impresses me is Mark Mobius. Mark, is it with a C? Mobius? Mobius? No, it's with a K. Here's this dude. He's a macro guy. He was the first guy, I think at Templeton, right, to start a mutual fund that invested overseas, internationally. Like, he was probably the first guy into China kind of stuff, right? Yeah, Templeton, Emerging Markets Group. So he was the first EM guy, really. And now he's left, he's got to be a billionaire. He's 86, so he's doing all right. But he's still writing these books. He's still traveling the world. He's still doing multi-billion-dollar deals. But he's like, he hasn't slowed down at 86, like not even a little bit. Okay, so anyways, I don't know. He wrote a book called Foreign Exchange and Money Markets. Maybe we should read that, huh? So like, again, like, why keep writing books? Why keep traveling? Why keep doing billion-dollar deals? Yeah, so I don't know. This is nonsense answers. Mark Mobius, a billionaire. So anyways, he's got enough. He's one of the most successful and influencers, man. Yeah. Anyway, so he's going on 90 and he hasn't slowed down. I mean, like he's launched a new hedge fund during COVID, so it's probably a couple years old now, flying around the world, raising billions and billions and billions of dollars and putting it to work. I mean, yeah, that's what I want to do when I'm 86 as well. Yeah. Meanwhile, I'll have this money that's just sitting around making more money. And I can live on that and not spend my money. Okay? And I totally intend to do it for you. I totally intend to start a fund and do that for you. In the United States, however, I'm only allowed to do it for those who are accredited investors. And what does that mean? You're a millionaire. Not only do I have to ask you, hey, dude, are you a millionaire? You get all uncomfortable. I don't like to talk about it. I have to prove it. It's a requirement of the SEC. Yeah. So I could just say, well, if you got at least $1 million in your retirement account, I can set that up for you and manage it for you. Yep. We'll double it, right? We'll double it and double it and double it and double it. And then you'll get to a point where we're not in the growth mode anymore. We're in income mode. So we'll switch it over from reinvesting all the income to suddenly paying you all the income. And as I've said before, I want a credit card tied to it. So we put all your living expenses onto your credit card, and your credit card gets paid automatically every month. So you don't even have to pay your cell phone bill anymore, your water bill, your groceries, right? All that is on your card. It just gets paid for. Wouldn't that just be wonderful? Just all happening. Yeah. Yeah, so I'm going to do that. Yep. Yeah. Yeah, crypto. Yeah. Now I can do it for millionaires in the United States, and I think I have to have less than 99 clients. So I can take, or less than 100. So I can take 99 millionaires and I can take care of you the rest of your life. And I'll have to ask you, I'll ask you two questions. When do you want to move from growth to income? Like, when do you want to get paid versus grow your account? You have to typically be like 70, let's say. And the second thing is, what do you want to do with all the money when you're dead? because you're going to die a millionaire with all that money you saved your whole life. You're going to die with all of it. So what do you want to do with it when you're dead? Does it go to your family or does it go to charity? Let me know and we'll get that taken care of. We'll pull all your expenses on your credit card. They'll all get paid. You live. Oh, I don't know, Gordon. It's a bit of an esoteric question. I don't know. I mean, most of what we spend is not paper dollars anyway, so maybe nothing changes, right? Yeah, can't do anything about time, hey, Maida? Not yet. Neri, you're out traveling today? Yeah. My other thought with the retirement fund, we would split the profits 80-20. It's fair because it's money I'm making for you. That's cool. Then I thought, what's our goal? Well, our goal is to lower volatility, but still achieve the annual average return. And then sort of a non-written goal is be able to compound faster than traditional investing. Okay. So that when you're ready to retire, you have way more money than if you had just done a normal strategy. Okay, that'd be great. Yeah. Cool. So when you look at what does the stock market like the S&P 500 do? Well, it's up 20%, up 20%, down 30%, up 20%, down 5%. Up, you look at the long-term average, it's 8%. Okay? So let's say we have a goal of 10% a year with less dips and you enjoy the upside, but there's a bit of consequence being hedged all the time. Nonetheless, we take out the peaks and the troughs as much as possible, but always earn money. Doesn't matter if the stock market goes up or down. We want to earn 10% a year. I take my fees, you get 8%. And you're like, 8% is the 50-year average. So if you got the 50-year average year after 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 year, no ups, no downs. Oh, but if the stock market's up, your net asset value is going to go up. So you're actually going to enjoy that. Plus, if you're reinvesting the 8%, because remember, you're actually getting cash, then typically you wouldn't be able to compound your returns because you're not taking the profits off your Apple stock. Because if you do that, then you don't own your Apple stock. So you just have those shares of Apple. So the only way to compound is dividends or add more money. But what if you could just take the profit and then buy more stock? So now you're going to compound greater. So nonetheless, let's get back to this idea. You're trying to achieve the 50-year average. So if we're doing 10 and you get paid 8 after paying me, then you got that with lower volatility and greater compounding. But what if I took it further and said, Well, I'll pay you 100% of the first 8%. You get paid before me. So you'll get paid in January, February, and March, and April, and May, and June, and July, and August. And we probably won't hit that 8% till what? September, October? All the money will go to you first. Yeah, and then at the end of the year, well, catch me up. Don't worry about it. You first. I thought that would be fair, huh? Do I hold trades during economic releases? You want to be in a day or two or three before the news release? Or you want to trade with a high volatility event-driven strategy? So let's pretend this was a 1-minute chart. Okay. Obviously, this dropped like a ton of bricks. So a high volatility event-driven strategy would be to draw a fib and look to sell in a box like this for continuation. So then you would look like this, and then you would project this out. 50 goes to the 1382. Okay? So let's say, two ways of looking at this. On the 4-hour, let me zoom in. Okay, on the 4-hour, I had this projected, this is a sell zone, and down. So if I was in somewhere along that way, would the news take me out? No. Okay? No, I maybe would move my stop to break even. But you should be well on your way, right? Well on your way. Or you trade right after the news, right? Which is the news creates the volatility. And so you let the volatility show you the direction, and then you trade the pullback somewhere between the 382 and 618. You get short. Okay. And now you're trading the vol. Okay. The third way, of course, is you're like, or do you wait after the news? Well, then you're really just getting back into the pre-trade trade, right? Where you're saying the vol breaks us, we come back up, we do a retest here. That's called a roll reversal, and then you drop it like it's hot. So you either should be short like here. Well, really, this goes all the way back to here. So you're either short here, A, short here, B, short here on the pullback, C, or short here, D, on the breakout. Yeah, well, Darko, these are very, very sort of big long-term investments that you have to sit on and manage, somewhere between monthly and quarterly rebalancing. But the idea for most of these, like in America, it has to be a retirement account. The number one risk that I have to declare to American investors is that I would earn too much income. Now you laugh, you're like, Wayne, that's not a real risk. No, it's truly actually a risk. Using dividends and derivatives, my strategy earns way too much income, and you're going to get a huge tax bill. Imagine paying taxes on stuff you're not even spending. But like I said, it makes money like a job. You will be paid money like you had a job, but we're reinvesting all that money for your retirement. So it can compound and compound and compound and compound. So there's no like single stock exposure. So you're just buying S&P500, Dow, NASDAQ, okay, that kind of stuff, right? So you're still buying these broad indices, and there's times when you rotate into one and rotate out of the other, right? So that's where the manager comes in. There's different strategies and on all that kind of stuff. But in America, it defeats the purpose unless it's basically your 401k. Because if it's in your 401k, you don't get to spend it, which is great because we want to compound it anyways. So it'll be in the growth fund. But you also don't want to be taxed. So you don't pay taxes if it's your retirement account. So you're like, oh, well, that's perfect. Yeah, well, that's why it's an endowment, a personal endowment. I'm going to manage it, and their money is going to live in perpetuity, as I was taught. Cool. Now, does all this work out in a European structure, Darko? Maybe, but I don't think people will have the same long-term view. So I don't know, right, Darko? Europeans may not, if it's an offshore account for them, they may not have to pay any taxes at all because that's how that works. In America, you still have to pay taxes. Onshore, offshore, don't matter. You're paying taxes. But for a European, it's much different. So then you say to a European, we're going to sit on this money for the rest of your life and it's going to earn 1% a month. And they're like, I want more than that. I want the money now, or that kind of stuff. And it may not, there might be a different mindset. So I don't know. What would never be of interest to me is like money comes in, money comes out, money comes in. It'd be so expensive. I don't make much money on a fund like that. I mean, it's truly a hedge fund. Every position is hedged. It's a lot of work, and there's not a lot of money in it. So like just the compliance and regulatory costs, the onboarding cost, how much time it takes to go through and bring someone on. It's like you spend thousands of dollars just bringing on a client, and you don't make that in a year. So you're like, oh, well, in 3 years, there'll be a little bit of love in it for me. So like, I don't know if a European would want to stay in for 20 years. Right? So Darko says, let's say in Germany, you need to pay 25% if you're taking profit. So we'd have to ask a German attorney, is the use of derivatives, like, first of all, we're owning positions and using derivative strategies against them or on them or with them. Is that considered taking profit? Maybe there it is. That kind of stuff, right? But I'm not ready anyways. I'm still writing the SEC documents. I have a draft of my private placement memorandum, so I need feedback on it. I have a draft of my letter to the SEC. There's a couple other questions of like actually how to structure it. There's probably 3 different choices on how to structure it. Now we're talking about the legal complexities of, are you a limited partner? Are you a subscriber? All these different things. Well, I have some things I need to analyze on that. But I have real money invested in the exact portfolio that I would manage. And it is awesome. It's awesome. Stock market comes down, don't care. Stock market goes up, I don't care. How'd you like to feel like that? Yeah. Yeah, well, ask around. Yeah. There will most likely be an offshore version for those that are not SEC. Like, as far as I'm concerned, the SEC doesn't give two hoots about foreign investors, right? But for the United States, you have to be accredited, and I have the burden of proof. I must prove to the SEC that you are indeed an accredited millionaire. And the best way to do it is like, my minimum requirement will be $1 million. How about that? If you don't have $1 million, but think about that. $1 million in a retirement account is like roughly $10,000 a month forever. And when you die 30 years later, let's say, you still have $1 million in your account. That makes me so excited and so happy that I think that's financial engineering at its greatest. Safety. That's like pride and joy right there, to be able to offer something. And so I will have to prove it to the government and then to you. But in my heart, I believe I've achieved it. Gary Gensler to leave MIT. Yeah. So anyways, like, again, it's sort of, what do I want to do with the rest of my life? And that's what I've decided to do. It's kind of cool. All right, I think we got to go. We got one more piece of news coming out today. If you're in my swing trading group or my day trading group, I will remind you that I'll see you at 4. Remember, it's in the swing trading room. Okay, we're not using the meetups anymore. Go to the swing trading room. It'll let you in, and then you click on the webinar, the button for launch the webinar, and you're in. Now, another nice kind of upgrade is when I start the meeting, you also get an email that will take you right into the room. And then now I've launched a new upgrade feature that as soon as the video recording is completed, it gets added to the page. But even better than that, it emails you automatically to say, hey man, the video recording of the swing trading group is now available. Click here to watch it. Oh my God, that automation is so nice. So you're like, oh, I missed the meeting, but here's the video. Oh, I think I'll watch it on my phone. Boom. Bravo, bravissimo. Yeah. Oh my God, that makes me so happy. So, peace on earth. May the pips be with you. May our profits be above average. Have an absolutely wonderful day. I'll see you at 4. Remember, tomorrow I'm not on Forex.Today. I'm on the FXStreet.com page or the FX Street YouTube channel. So I'll see you over there. I'll see you when I see you. Please click the like button on your way out. Last person, turn off the lights. Cheers.